And so I'm glad that you're here. That's excellent. So today, we're going to talk about this idea of finding the system that's right for you. Now, this is a really important concept for me because what I've noticed, and perhaps you've been through some of the same things that I've been through as a trader. When I first started trading, I thought that it made a whole lot of sense to simply find someone who's good at this and I'll just do what he or she does. And that's how I'm going to get good at trading. What I found rather quickly was that wasn't really the best way to do it. And hey, Nick, glad to have you here, buddy. Hello, Pat. Yeah, what I found was that wasn't really the way to do it. So I'm just curious, where are the people? I know most of you are watching the recording, but where are the people from here? Which part of the world are you from? Just curious, like, are you in London or Munich or Barcelona, or where are you at? New York? If you could just type your city in the chat box, I'd be interested. I won't name you or anything. Name your name. I'm just interested. Boston. Wow, that's early. Because right now, what is it? 6 a.m. in Boston? It's not that early, I guess. I thought that most of you would be in Europe. Cool. Are most of the people attendees, are you from Europe, most of you? Or, yeah, right, London. Okay, gotcha. Interesting. Yeah, I'm thinking about coming back out to London. I enjoyed my trip about a month ago. I might come back out there, Nick. Okay, so when I I got sidetracked. I'm just curious to see where people are coming in from. So when I first started trading, I just thought, look, all you really have to do is find someone who's good at this. Just copy what that person does and you'll be fine. Obviously, that's not right. It doesn't work that way, right? Essentially, the more important thing to do is to simply determine what it is that you believe in as a trader, and then build your system around that. And all of the training that I do with students, that's really the foundation of it. Hey, Pat. So you're in Madrid. Cool. And Nick. So okay. So I thought most of you would be in Europe. So that's kind of how I did it. Is I thought, well, I'll just figure out what someone else is doing. That's the first sort of honey trap for me was GAN and getting into GAN and trying to learn all that stuff and crack the code to the universe and all that. But really, what it ended up being for me was just simplifying it as much as possible. And I found that the simplest, most robust trading systems tended to work on the vast majority of markets and time frames. And so that was kind of my end result of my 4.5 years of losing money and trying everything under the sun. I kind of cracked it when I decided that I was going to be really simple in my approach, and I was going to kind of look for the same pattern on multiple different markets. And that's what I still do today. And what I want to do for you is to highlight for you in this session exactly what your bias is. So what I would like for you to do, if you can, is just grab a piece of paper and or your phone, if you can type, like on a notepad thing on your phone or something, or your tablet or whatever. Just grab something nearby, a piece of toilet paper or newspaper or something. Whatever you can, grab a sticky note. And then what I'm going to ask you to do is go through a process here. And at the end of it, I promise you what you'll have is a better idea of what your biases are. Because here's the thing. Your biases are going to dictate how you trade, whether we like it or not. And I'm no different from you. So if I believe in certain things, and again, we're going to go over this in just a moment. I'm going to give you a quick test to sort of hone in on what it is that you believe in. But the most important thing for you is to figure out what that is, because otherwise what will happen is you will always end up back at your biases. So, for example, you might trade like Joe Blow Trader Joe trades for a while until something happens, and then you change it and you shift that system back into something you're more comfortable with. Or you might trade like Trader Ann trades, and then something happens, you run into a drawdown, and you think, this sucks. This doesn't work. I'm quitting this. I'm not trading what Trader Ann does. This is stupid. I'm going to trade something else now. And so you kind of get in that cycle of always looking for a better system. It doesn't really matter if you're changing a system or actually just scrapping it, throwing it in the rubbish bin and starting all over again with something totally different. The point is that if you don't trade your beliefs come bubbling up eventually and will take over your trading system. So my whole point is, why don't we just identify our beliefs and we'll work off of that, okay? So hopefully you've got a scrap of paper or a tablet or something that you can jot down some notes, because this is going to be critical. So you ready to go? Is everyone ready to roll? I'm just going to take a sip of my tea here. It is winter in Australia, although it wasn't all that. It was actually quite nice today. Okay, so you ready to go? Let's go. All right. So here's the deal. Number one, this chart right here, can everyone see this? Is the Aussie Kiwi 15-minute chart. Doesn't really matter the market, the time frame. I don't really want you to pay attention to that. But what I would love for you to do is, when you look at this chart, what do you think? This is the first chart. You have to decide here one of three things. You have to decide that you want to buy when you see this chart. And again, it's not really necessarily based on the exact candle pattern or what's going on here on the chart. It's more likely, is this the type of chart that you'll be looking for a buy on? Or is this the sort of chart that you would be looking to take a sell, right? Or is this the type of chart that you'd be looking to say, no trade. I'll walk away. I'm not gonna take a trade here. Okay, so that's basically it. Is it that you look at this and you think no trade? Is it that you look at this and you think sell? Or is it that you look at this and you think buy? Okay, so just based on what you see here, what do you think? So just write that down right now. Write down whether you see this as a more likely to be a buy trade, a no trade, or a sell trade. Okay? And then on a scale of 1 to 10, on a scale of 1 to 10, write down whether you like this trade or you don't like it. As like 10 would be, yes, I would take this sort of trade every single time I see a chart like this. And 0 would be like, no way, there's no way I would take this trade. Even though I'm looking for whatever, I wouldn't take a trade, So it's either buy, sell, or no trade, and then you give it a score of 0 to 10. Okay? Does that make sense to everyone? Is that clear? Hopefully that makes sense. What we're trying to do here when you write down these notes is we're trying to make sure that we can figure out the type of setups that are going to make sense to you. I'll just give you a few minutes to decide to write down on your notes, buy, no trade, or sell. This sort of market, when you see this, are you more likely to say buy, no trade, or sell? And you could be saying to yourself, I want to take a buy trade, even though, for example, like you might not take a buy trade right where the market is right now, but you might be thinking, yeah, if it breaks this high, I'm going to take a buy. Or if it breaks this low, I'm going to take a sell or whatever. The point is, would you be getting ready to set up a buy trade, or would you be getting ready to set up a sell trade? Or would you look at this and say, there's no way I would trade this? Either one of those three, right? And then write down a scale of 1 to 10. 10 being, yeah, this is the greatest trade I've ever seen. 0 being, there's no way I would take this trade. This is crazy. All right, does everyone have this one down? Does everyone have this first one down? Yes? Are we ready to go to the next one? If you're ready to go to the next chart, please type yes in the chat box so I know that we're ready to go. And I know those of you watching the recording don't really have that option, but that's okay. You should hopefully have plenty of time. Yes, yes, yes. Okay, let's go. Ready to roll. All right, we'll go on to the next one then. All right, so that was the Aussie Kiwi. Now we're going to shift over to I think the next one I had was the Euro Pound. Nope, it wasn't. Yeah, here we go. Here's the yen. Again, same thing here. When you see this chart, would you be thinking buy, sell, or no trade? Buy, sell, or no trade? What would you be thinking here? You ready to go? Buy, sell, or no trade? Okay. Are we ready to go to the next chart, guys? Let me know if you think you're ready. Okay, you're ready. Okay, cool. And then again, 1 to 10 or 0 to 10 scale. 0 being no possible way I'd take a trade on this chart, and 10 being, yeah, it looks really, really good. Okay, let's go to the next one. No, it's not that one. No. No, it's not that one. Hang on, I gotta find the right chart here. Okay, now looking at this chart right here, looking at and more specifically, kind of the recent price action here. If you saw a chart like this, would you be setting up a buy, a sell, or a no trade? Like, does this get you excited? And you can, in other words, would you trade this on a scale of 1 to 10? Would you trade this? Now, some of you might be thinking, well, it depends or whatever on what happens, and that's fine. But the question really is, would you be interested in trading a chart that looks like this? So you write that down on your piece of paper there. Given where the market is right here, would you be looking for a buy, a sell, or no trade? Or, and again, on a scale of 1 to 10, does this look like a really good possible setup, or not so much? Again, we're just concentrating on the recent price action. We're not really looking at this so much. I mean, you can if that's part of your analysis, but the important point here is, what does this look like to you? Does it look like a trade could be setting up? All right, you guys ready to roll to the next one? I'm going to take a sip again of my water. So buy, sell, or no trade, and 1 to 10. 0 to 10, is this a good trade? 0, not, no way. 10, yes, I'm going to do it. Okay. All right, ready to roll. There's one more chart here on during our test that we're going to look at, and that is, I'm going to show you. Okay. This one really, but okay. Really, what? Okay. On this chart right here, seeing what you see right now, if you saw this chart, would you be thinking buy, sell, or no trade? And And then on a scale of 0 to 10, 0 being there's no way I would take this trade, 10 being yes, I have to take this trade, what would you take here? What would you rate it? A 10 is I have to do it, or 0, there's no way I would do it. This is basically, again, the same story here. Buy, sell, or no trade. And then 0 to 10. And let me know, can you just type yes in the chat box when you're done with this one? All right. Everyone done? If you're done, can you please type yes? When you're done, we'll move on to the next bit. So everyone has it? Yeah? Cool. All right. So here's the thing. Now we're gonna talk about the kind of setups that make sense to you. How many people were looking at this chart and you were thinking, I would be looking for a buy trade here? If you're looking for a buy trade on this chart, type buy into the chat box. You see this chart right here and you're thinking buy. Okay, there's a couple. Yep. Okay. Yep. Right. So what this means is you are probably a swing trader, a reversal trader. You're looking to find those swing points in the market. Okay. So if you looked at this and you were thinking buy, and it really should be your gut instinct when you see the chart, not based on what the most recent trading book you read or whatever. It's got to be based on what you think. And most traders, when they see a chart like this, that's what they think. They think, I want to buy. I want to find that turning point. Now, you might not get it the first 1, 2, 3, 4 times, but eventually you can hook into it and you can have a really good reward risk ratio if you work it out. And it all comes down to exits, really. And we'll talk about exits another day, but for right now, the important thing is what makes sense to you. If you see this and you think buy, that's what makes sense to you. How many people were looking at this chart and you thought, yeah, I want to sell here. This is a downtrend. I want to take a sell trade. If you were thinking sell, who type sell in the chat box if you were thinking sell. I'm going to write some notes here. So if you were thinking buy, then you are a reversal trader. Yeah, so John says I was thinking sell. So if you were thinking sell, then you're more likely a trend trader. If this is really what you were thinking and not not sort of that you think it's the right answer or someone taught you the trend is your friend or whatever. You really believe this when you look at this, you think, I can't help but want to sell here. Then you're a trend trader. So that's really what it comes down to is when you see a market going down, are you looking to hook into that turning point or are you looking to basically ride the trend? It's as simple as that. Now, if you were thinking no trade, then there might be a different type of setup for you. But it's important to note right now that if you decided when you looked at this chart that you'd be more likely to buy, then you're more often going to be the type of trader that looks for a reversal or a swing point. You're trying to hook into that market turning point. It's a very, very common. In fact, it's like 3 to 1. More traders are looking for that style of trading than to ride the trend, believe it or not. At least in my experience, that's what I've come across. So most traders aren't looking to sell here. Most traders would be looking to buy here. Now, let's go back and let's look at the other ones we had, we had the Aussie Kiwi. How many people looked at this one and you were thinking, I wanted to sell? Who was thinking that you wanted to sell here? Who was thinking that you wanted to sell here? Type sell in the chat box. If you were thinking, yep, I wanted to sell here. If you were thinking that you wanted to sell, then you are more likely to be a swing trader, a reversal trader. You're trying to get the end of the trend. You're trying to hook into that strong move that happens when the trend just completely dissipates. The market's always, when a trend is engaged, the end of the trend will come always faster than the trend. It'll go much quicker, and you get lots of profits really quickly at the end of the trend. Whereas during the trend, sometimes you got to wait for the pullback, and it'll march ahead and pull back and march ahead and pull back. And it can be very tedious following that trend. It can also be very profitable. If someone was looking at this chart, if you were looking at this chart and you decided that you wanted to buy, then obviously you would be the style of trading that makes sense to you is more likely to be a trend following system, and you like to buy. Now, I have a question. Is there anybody listening to this right now that when you looked at the last chart we were looking at, that last one that was going down, you were thinking that you wanted to sell on the pound Aussie? So you're looking at this chart and you're thinking, yeah, I want to sell. How many people here, and a lot of you are watching the recording, I know, but how many people here were thinking sell here on this trending market here, and on this one, you were thinking sell as well? Is there anybody out there who was thinking sell on that last chart and sell on this chart? Anybody? Yes. Okay. You may have a sell bias, which is fine, but you need to be aware of it. So you were looking to basically sell in both instances. Now, you could make a case that the prior chart was a more sort of measured downtrend, whereas this is more of an explosive and violent uptrend. But either way, this market's going up and the last market's going down. So if you wanted to sell during an up market and sell during a down market, you probably have a sell bias. I don't necessarily think there's anything wrong with that. People may try and beat that out of you, but I think you just need to be aware of that and know that that's your bias. And if you want to be a trend trader, then just take sell trades with the trend. And if you want to be a reversal trader, just take sell trades when you see the market go up and give you a reversal signal. I mean, these are the sorts of things you need to be aware of. And I know you're not the only one here, John, but other people are probably thinking this as well, especially those people watching the recording. So it's important to keep that in mind. Now, the last thing I want to show you is that sometimes you'll see these markets like, I think we were looking at the yen, weren't we? No. Yeah, this is another one. Again, if you were thinking buy here, then it's more likely that you're a trend follower. When you saw this chart, if you're thinking buy, you're a trend follower. However, and if you're thinking sell, you're more likely to be a reversal or a swing trader. However, some of you may have been watching this yen chart and you were thinking buy, and some of you may have been watching this pound Aussie chart and you were thinking buy. Again, if that's the case, then you are more likely to have a buy bias. Your bias is to buy things, and that's fine, but you need to decide whether you want to be a reversal trader or a trend trader, and just take those style of trades that are buys only because you're more comfortable doing that. That's fine. It's, you can work on it if you want to, but really, I think it's better, at least in the beginning, if you're just starting trading, just embrace that. Okay? All right, so where is the other one here? We had one more. I want to show you one more. I thought it was the... Nope, it's not that one. Nope, it's not that one. We had one more. Nope, it's not that one. Where is... Oh, it was this... was it the Swissy? No, it wasn't the Swissy. Yeah, it was. It was the Swissy, wasn't it? No. What was the other chart we had? Pound Aussie. Yep. There was one that we had where I drew the box. It was the Aussie Kiwi. That's right. No, it wasn't the Aussie Kiwi. Now I'm confused. Where was that sucker? We had the box. Pound. It was the pound. Okay. There you go. Yep, there it is. All right. Now, if you were looking at this chart and you're thinking that you wanted to take a buy or a sell trade, So in other words, you looked at this chart and you said, yeah, I don't really know. I might go either way. Then you're a breakout trader. You like to wait for the market to get really quiet. And, sometimes people use Bollinger Bands or some sort of channel or whatever. The point is you like for the market to get quiet, and then you wait for that explosion when it explodes out of that. Kind of like it did right here. And then it's getting quiet right here. And then you wait for it to blast out of there, right? So you're more likely a breakout trader. If you looked at this and you thought, no way do I want to take a trade here, then perhaps you are simply not a breakout trader. You look for trend following setups, go with the trend, or reversals, swing points, those sorts of things, and you're not necessarily a breakout trader. Does that make sense? So you really have to decide here, based on what we know from what we've gone through here. We know that you either like to take reversals, like to go with the trend, you have a buy bias, you have a sell bias, or you like to trade breakouts. Now, what are the positives and the negatives? Now, we know that if you trade with the trend, you are likely to have a lower win rate. We know that. However, if you trade with the trend, you can often get really good reward to risk ratio, usually because a lot of trend traders trade with some sort of trailing exit. Okay, so this is if you're a trend trader. Your reward to risk ratio can be very favorable, but you might have a lower win rate. Okay, now, if you instead prefer to trade against the trend or when the trend's collapsing, or basically take swing trades, we know that it is possible for you to have actually a higher win rate. It's going to depend on your exit a lot. A lot of it's going to depend on your exit, but your reward to risk ratio may not be necessarily as good. It can be, but it'll reduce your win rate. So here's another piece of this that you need to think about. If you want to win a lot, then you might take a lot of little profits. You just have to be very careful not to take profit too early and stick to your system. If you're okay having a lower win rate and you don't mind losing quite a bit, you can have some really massive winners. But again, that's probably going to fit in line, in a lot of cases, it's going to fit in line with a trend following system. Now, of course, you can tweak these. You can add elements to them where you take a little bit of profit in a trend following system to kind of blunt the losses and things like that. But the important thing to keep in mind here is that part of the psychology that you have to endure as a trader is based on whether or not you want to win. It's not only do you want to buy or sell, whether you have a buy bias or a sell bias. It's not only whether you like to ride the trend or take reversals, but it also, what locks in there is your psychology about winning. Do you have to win more often? And if that's the case, then you might have to trade a system that has a lower reward to risk ratio. And if you want to have a really, really favorable reward to risk ratio, looking for 4-to-1, 5-to-1, 6-to-1, that's going to reduce your win rate. Okay. And that means that that's going to affect your position sizing too, because you're going to have to withstand those drawdowns that are inevitable, and they're inevitably going to come when you are trading a system that has such a low win rate. As the win rate goes down, the drawdowns also get deeper. So that's part of the game. Okay. Does that make sense to everyone? So does this make sense? Now, breakouts can go either way. Again, it's going to depend on how you go with your what you do with your exit strategies. And we'll have another webinar when we look at exit strategies. But for right now, it's important to note that, the problem with breakouts, of course, is dealing with the false breakouts. That's the tricky part. So you've got to deal with that by either taking profit and moving to break even, or using some sort of confirmation, or doing something to deal with that, or just being okay with the fact that you're going to have a lot of losers because you get so many false breakouts. I don't like to take the breakout immediately. I like to wait for the confirmation, but that's my style of trading in the last kiss style. You may have a totally different style. So that's what I prefer to do. So if you're trading with the trend, you have to know that when the markets are ranging, you're going to get whipped around and you're going to lose a lot. If you're trading reversals or swing points, you have to know that when it's trending, you're going to lose a lot and you're going to get blown. You get these reversal signals that just get blown right by and you're going to lose on those. So when it's a very strong trend, you're going to be in trouble. And also when you're trading breakouts, you have to know that when the market's range bound for a long time and keeps acting like it's going to break out, these false breakouts can whipsaw you around as well. Because in essence, what you're doing as a breakout trader is you're trying to catch kind of like a new trend. So it's a little bit like trend following, but not quite, because what you're doing is you're saying, oh, here comes the new trend, but you're getting in really, really early. So does that make sense, everyone? So you have to keep in mind here what makes sense to you as a trader. And then based on that, what are your weaknesses? And so it's quite obvious. The weaknesses with trend following and trend systems is that you have a lower win rate. And the weaknesses with the reversal systems is that your reward to risk ratio may not be as good. It can be good, but it may not be as good. And also, if you're trend following, you might have a very favorable reward to risk ratio, but sometimes you don't. And that again is going to come down to your exit. And then finally, with your breakouts, you're going to have to know that by trying to pick when the new trend comes up, you might lose a lot too, because every time you get these signals, you think, oh, there it is. There's the new trend. It's going to go now. It's going to go strong. And sometimes that's just a false breakout. So when the markets are range bound for a long time, you can get a lot of false breakouts on the breakout systems. Okay, cool. All right, so what I'd like to do now, guys, I'd like to have a look at the charts, and I'm happy to go over whatever charts you want to look at. We can talk about the trades that you are interested in, or I can show you the trades. I can show you the trades that I'm in right now, if you want. But I'm happy to go over those now. So, which charts would you like to see? I can show you mine. Yep. The Canadian dollar. This is a weekly chart trade. I know this is the daily, but so this has been in for a few weeks now. This is the bullish candle right here. It was this bullish candle right here that was the signal. It actually broke the high of this candle, got in, pulled back, came back up. It's kind of up and down. There's not a whole lot going on that one. And then I'll shift gears over here. Euro yen. I'll show you my silver trade too. Here's Euro yen. All right, let's have a look. On the daily, are you looking at the daily here on the Euro yen? Interesting, this one. Okay, cool. All right. So on my chart, I'm not sure if you're selling. I'm guessing that you were thinking that the market's going to fall after hitting this resistance level. Is that kind of what you were thinking? If that's the case, I would say that it didn't trigger. Here's what I mean by that. Yeah, okay, that's what I thought you were going to say. Okay, so here's your support and resistance zone right here. But, so if you were going to trade this doesn't quite fit the criteria for a bearish big shadow. But it would fit the criteria for what I call a bend trade. Unfortunately, it never triggered, and I'll show you why. So what I would be looking for here, I'm trying to get this right. There we go. So this candle here, I'll highlight the candle so you know. So this candle right here, this big bearish candle, is right on the zone. It's really well placed, but it doesn't have a lower low. Notice that on that chart? The low on this candle is 115.47, and the low on the prior candle is actually lower at 115.36. So there you go, 9 pips lower than this one. However, that doesn't mean you can't take a trade, because you can do what I call the bend trade, which is basically a bend in the line at a support and resistance level. So this is where it bent up and went up. That's not a good bend trade, by the way, but this actually is a pretty good bend trade. But here's where it falls apart. With the bend trade, I put an order in right below the low here. Now, in this case, it doesn't really matter. I mean, it should be the trigger candle right here, but because this candle has a lower low, I'd actually probably put it under there. It doesn't matter. Either way, it's actually not triggered because you can see here the market gapped. So this is Friday. The market gaps up and then it goes higher. And here we are now, it's Tuesday. So that's yesterday, it gapped up on Monday, and here we are on Tuesday. So if I were to trade this, what I would do is I would put an order below 36. So below this blue candle here, that's Thursday's candle. And that's at 115.36. So like 115.29 around there. And then my stop loss would go up above this high up here. And that high would be 118.40. So that would be roughly 29. So that's about, we'll call it 320 pips. And your target would be down here at 440. That would, target one would be down here at 420 or whatever. So that would be fine, right? To have that kind of a risk for your first target. So it still could be a good trade, but the fact that it yesterday closed above this zone isn't good. It would basically have to fall today, tomorrow, and start going lower to make it a good trade. Does that make sense? I still think there's a potential here, but the problem is, and the thing about Mondays is Mondays you'll often get the market going in the wrong direction. Oh, you're still long. All right. Yeah, if you were long from 112.05, which is, yeah, if you're, I would actually wait. To me, if it doesn't break this low here, so basically what you'd be using is like a 3-bar exit. You know what I mean? I would just put my stop loss down here below this blue candle. That's what I would do. And just keep ratcheting it up as it goes. And if it doesn't break that little swing low there, yeah, that's what I would do. So for example, like let's say today's candle closes where it's at right here, then you could move it underneath the red candle. And then you get another candle up here, you can move it underneath the blue candle. Just keep, like a trailing stop. Yeah, that's what I would do. Yep. Okay, let me show you. If you have any other charts you guys want to see, let me know. I'm going to move over to silver now, and I'm going to show you a couple of other things. In 1 second. Okay, so here's silver right here. Oh, sorry, that's S&P. Let me show you silver. Silver's right here. So I went long on this candle on the weekly. It's gone up quite a bit, hit target 1, target 2. We've moved the stop loss to 1770. And really, it could probably go at 1850 at this stage. But it hasn't hit that third target at 2150. And I wouldn't necessarily think that it's in trouble unless we get a really big bearish candle. And then it might be bending over. But I think it could just be consolidating here. And it might make another stab. So I'm still happy to hold on to this trade. I'm just tightening up my stop, basically. That's all. So that's another one I'm in. Now the S&P is interesting to me, and here's why I say that. Because everybody's shorting it, basically. Because everyone's shorting the S&P, so many traders, like on CFDs I'm talking about. Let me show you something. I'll bring this over. See where it says here, client sentiment. So most traders are shorting the FTSE. They're long gold. They're shorting the Dow, and they're about equal on the DAX. But as far as the S&P 500, that's what this is right here. Right. This is IG markets. But if you can get this for any broker, it's worth having a look, because basically once 85% of the traders go in one direction, it usually means that they're dreadfully wrong. So for example, I would expect the Dow to go up and probably the S&P as well. So what we really need before you short the S&P is we need some sort of a some sort of a change in the sentiment. And these are positions that people are taking at IG. So most traders actually short the S&P. So I think this is, again, a consolidation, and it's going to bump up and go higher. Also, notice that a lot of people were shorting gold. So if you look at your gold chart, what you'll notice is there's this bearish candle. It's still technically closed on support according to my chart and the way I see it. Closed on top of this support, which was resistance back here. So I don't really think I would be shorting gold right now. And it's simply because, again, I think it might just find like a plateau here and then bump up again. I'm not saying that I wouldn't short gold in the future. I'm just saying right now, when everyone's shorting gold, not a good time, right? And those are really cool ways to do that. If you can keep, and a lot of brokers will allow you to see this. I can show you for currency pairs too. So this is the this is IG, but if you go to, I've got a page where it redirects to Wanda's and crowd. So if you go to fxjake.com/crowd, it'll just send you to Wanda's because it's kind of a long link here. But what you'll notice is we want to show all of them. Right here, it's pretty well spread out, so we don't really have any. Yeah. We don't really have any drastic. It really needs to get 80-85% before you get excited about it, Yeah. So I'm not too excited about any currencies, but as far as the CFDs, S&P, Dow, those look like brilliant charts to go long. If you get a long signal, I would definitely say go for it, basically. All right, are there any other charts that you guys want to see before we shut it down? Are you all good? All right, cool. Well, thanks so much for your time, guys. I wish you very happy trading, and we will see you in the next webinar. Have a good one. Have a great trading week. Take care. Thanks a lot, John. See you, Nick. Bye, Pat. Thank you. See you, Adam. Bye, Al. Dia. See ya. Bye, guys. See you next time.